Time to move on then. Let's get straight to an exclusive conversation now. It was a healthy performance from HDFC Life in the May business update. This as the company's combined premium with Exide Life saw a 26% jump on a year-on-year basis. The market share as well increased by close to around 180 basis points. Yash Jain, he caught up with the managing director and chief executive officer, Ms. Vibha Padalkar, and began by asking her about the company's strong performance in the past month. Let's hear her out.
We have typically grown between 1.8x to 2x of the private sector and slightly higher as a multiple of the overall industry. May was better than April and hopefully June will be better than May. And that's how the turnaround from being a higher average ticket size focused sector, we are moving into deeper penetration, and that's again the right way to go. So on the retail APE business, we grew 9%. Again, that was 1.8x the sector. Our market share expanded by from about 16.5% to 16.7%. Similarly, on group business also, we retained our #1 position in the private sector, and our market share grew over there as well, and we clocked 25+% growth. Again, it was over 2x the private sector. What was interesting is the number of policies growing as well. So there also we grew 2x the sector. But what's interesting is that the month of May showed double-digit growth in the number of policies, which again shows moving inward, and trying to cover more and more lives. The bugbear in the last recent quarters for the sector that has been on protection. So retail sum assured and hence retail protection also has grown upwards of 50%. So that also has seen a turnaround. So it has been a holistic picture, so the building blocks, for this year are reasonably sound.
The analyst community particularly are interested as far as the VNB growth is concerned. In the first 2 months, with the kind of APE growth that you've had, with the kind of premium growth that you've had, what is the kind of VNB growth that you've sort of derived out of these numbers?
On a full year basis, our VNB growth should again be in the mid-teens, which will be very much in line with our top line growth. And we're saying that on the visibility that we have today, and we will again take stock halfway through the year, we should grow by mid-teens. And thereby it would imply that we would hold on to, or thereabouts, hold on to our new business margins.
There was a very interesting note which came out recently which spoke about that the stock price would not get the kind of multiples from investors, would not be able to sustain those multiples if 20% plus VNB growth is not achieved. What I want to understand from you is two things. On the APE side, where do you see FY24? And on the VNB side, you said mid-teens. What will be the strategy to sort of take it from mid-teens to 20% plus?
So on the APE growth, this is without removing the above 5 lakh policy, that level, just adjusting for the normalization in March. What we have said is we are gunning for mid-teens, and hence VNB will be mid-teens. Now, if I were to compare growth like for like, which means that I exclude above 5 lakh ticket size policies in my base, then it will be about 25% growth, between 20 to 25% growth. And having said that, if you were to cut H1 versus H2, I'm reasonably sure that H2 will show much higher levels of growth, closer to the trend of 17-18% that we have been consistently delivering. That we should see that in H2. H1 so far YTD May has been say 9-10%, and I said June should be better than May, and then Q2 should be better than Q1, and that's why H2 should be noticeably better than H1.
What kind of margins do you see yourself extracting for FY24? And importantly, at the 30% level now, do you think somewhere, at least for some time, the margins have sort of peaked at 30% levels?
Even without the tax change, my belief was the current construct of margins is where we will be, with 2 caveats. That any company does not drop their ranking, because if one drops one's ranking, you can get much higher levels of margins, right? That's not a difficult ask. In the case of HDFC Life, we have retained our position without dropping our rankings, and we are #2 in the private space and #3 overall. So assuming you hold on to your ranking, you hold and you grow faster than the market, your margins will hover in the range of say 28 to 30%, something around that. Second point I have here is that assuming that the current dynamics of commercials, what are the dynamics with one's key distributors, all of those things, because that's something that's an evolving. But as of now, I think it would hover to your question in the zone of between 28 to 30%.
One more thing that I want to understand, and this is on the credit life side. HDFC Bank looking at expanding its presence when it comes to the housing segment. On the credit life side, where does it stand out of the total portfolio right now? And with the merger and the expansion of its presence, how do you see that sort of triggering the growth on the credit life portfolio for HDFC Life?
So the entire credit life and the mortgage business and us wrapping some of the products on the mortgage side has been done well with HDFC Limited. Also for the business that has been sourced by HDFC Bank. So that well-oiled machinery is anyway has been around for a long time, and we expect now that as a culmination and then them cross-selling and growing on that base to even grow faster. So last year we grew just short of 50% overall on my credit life book. So this this opportunity is huge, and whatever it is that HDFC Bank takes as a target going forward, we should grow in tandem with that, if not slightly higher than that.
What could be the immediate gains that would be reflected as far as your financials are concerned from Exide Life, and how soon do you see those tangible gains start appearing?
So in terms of having an entire vertical, which is our agency business channel, that has been consummated within overall HDFC Life. We were small, and the erstwhile Exide Life was a lot bigger. Correct. So they are now running this entire channel, and our tier 2 and 3 strategy this year, along with the customer acquisition in terms of more and more covering more and more customers. So that is one stated objective, and the second is making inroads into tier 2 and 3. I'll give you one data point. Tier 2 and 3 used to be about 60% in terms of number of policies for HDFC Life. Today it is about 75% because of this. And happy to say that we have managed to retain almost all our key partners that were there, that were attached to Exide Life. On the distribution side. On the distribution side. Yeah. Second is on embedded value. Very well-run company, no skeletons in the closet, touch wood. Up to now, whatever we thought we were buying is what will unwind, and so that are also great level of comfort that we've got.
As far as solvency and margins both are concerned, the reflection is very well factored in to what we see on HDFC Life right now, and no negative surprises there as well.
Absolutely, and hopefully we pleasantly surprise people who are tracking us, because we delivered margin neutrality at least 3 quarters before what we had hoped, because we had shared that Exide Life, because they lacked scale, their margins were low single digits versus us being close to 30, between 26 to 30. And we delivered last year margin neutrality ahead itself. So, which just means that HDFC Life's margins would have been higher to make up for the shortfall. Correct. Right? So, absolutely. So, that is also very much on track. And solvency, we ended at 203%, including Exide Life, the erstwhile, and so that's at a comfortable solvency.
Aberdeen, erstwhile Standard Life, sold about 1.6% stake in HDFC Life. Just want a confirmation, was that stake bought by HDFC, and are we through that 50% threshold?
No, that stake was not bought, because there is some approvals, regulatory approvals that are still pending to be able to buy our stake. Hopefully that should come very shortly, and then they will be able to buy.
So HDFC wasn't the buyer in that block deal?
No.
All right, that was a conversation with HDFC Life.